Welcome, dear traders. You are watching a recap of the Asian session on July 27. Asian stock exchanges kicked off Thursday with a moderate rise. Australian stock indexes grew above 5 months highs amid a rally of financial and tech shares. Risk appetite returned to stock exchanges after the Fed meeting yesterday. As widely expected, the regulator raised the key rate by 25 basis points. Over the past 12 meetings, the central bank has kicked the key rate 11 times and brought it to a record level of 5.5%. Although the regulator gave no specific comments, it did not exclude new rate hikes at the upcoming meetings. Jerome Powell's speech at the press conference was neutral. His remarks were quite similar to those made on July 14. He also mentioned the possibility of a further tightening. It will mostly depend on incoming data and labor market conditions. It's certainly possible that we would raise the federal funds rate again at the September meeting if the data warranted, and I would also say it's possible that we would choose to hold steady at that meeting, if that was the right policy call, Powell said. The US dollar was unable to resume growth due to the Jerome Powell's neutral comments. Besides, traders are waiting for fresh market starts. In Asian trading, risk appetite remained high, given a strong start of the earnings season and expectations of additional stimulus measures from China. The US dollar lacked drivers for further rise. On a Thursday morning, it failed to win back losses caused by recent data on inflation and employment. Demand for safe haven assets, especially the US dollar, is weakening as the speculators are anticipating the end of the tightening cycle. As a result, it slid into the range of 100.60 and 101.10 versus its main rivals. In general, the US dollar index has been falling for the third day in a row. Since yesterday evening, it has already declined slightly 3 times, approaching 100.70 at the end of the Asian trading. It was also in a negative territory ahead of the ECB meeting. The majority of investors are betting on a rate increase. The euro, whose share totals more than 57% in the currency basket, pushed the US dollar even deeper into the bearish zone. The Bank of Japan will announce its rate decision tomorrow, judging by the rhetoric of policymakers. There could hardly be any changes to the monetary policy settings in the near future. Nevertheless, the dollar-yen pair has been falling for the 4th consecutive session. In the Asian session, it maintained a downward movement in the range of 139.30 and 140.50. Since yesterday, the pair has broken through the support level of 140 twice. At the end of the Asian session, it also consolidated near this level. The yen mainly climbed amid overseas news. A possible policy reversal by the Fed is already putting downside pressure on the US dollar and boosting the bullish sentiment on the yen in the medium term. As the Fed is likely to end aggressive tightening soon, the risk-on sentiment has improved significantly. It was bullish for commodity currencies, and the Australian dollar entered the upward range of 0.6755 and 0.6823. It rose above 0.6800 amid a weaker greenback. Apart from that, oil prices jumped following news from China. In the Asian session, the Aussie gained about 1%, trading at a new weekly high of 0.6819. At the same time, fears of an economic downturn in China may become a negative factor and slow down the rally of the commodity currencies. The Chinese industrial sector is in a bad shape. Industrial profits fell to 16.8% amid weak demand. However, earlier this week, Chinese policymakers announced plans to support the economy. However, there have been no results yet. Concerns about whether China will adopt stimulus measures are intensifying every day. The Kiwi logged the largest intraday gain in 2 weeks amid expectations of stimulus measures by China and the general weakness of the US dollar. On Thursday morning, the Kiwi grew to 0.6274. It continued to move in the green zone between the resistance level of 0.6273 and the support level of 0.6206. And that's all for now. Hit the subscribe button and stay up to date with the latest market developments. Leave your comment down below and let us know what else you would like to see in our video reviews. See you soon!